Whether you're celebrating Halloween or El Dia de los Muertos, there's no scarier place for investors than investing in long-term bonds. Today, I'm going to be walking through how Microstrategy took dead zombie capital in bonds and made it come to life with their Bitcoin treasury strategy. It's pretty scary stuff. Los bonos muertos, viva la Bitcoin. Let's go. What's up, everybody? This is Dante Cook with Bitcoin Simply, where I help you to understand macro and markets in a simple way. Subscribe to the channel if you already haven't. We drop content here 6 days a week, and today we're going to be going through some scary stuff. Happy Halloween for most of you. I'm recording this video on October 31st, which just happens to be the 16-year anniversary of the Bitcoin white paper, which dropped on October 31st of 2008. It went from an idea that a random guy on the internet published to a $1.4 trillion asset class that has investors from all over the world flocking into it. When looking at the returns for Bitcoin on Halloween, the returns have been scary good. Bitcoin has gone from about 20 cents in 2010 to over $71,000 today. You know what else has been scary? Flows into Bitcoin ETFs the past few days. Bitcoin ETF inflows have returned to levels that we saw earlier in the year when the ETFs were launched and investors were flocking to this asset. We've almost crossed $1 billion in inflows the past 2 days. BlackRock's IBIT took in a staggering $875 million worth of inflows in just 1 day. But now for the scary stuff that you came to see in this episode. When you compare bond performance to that of other asset classes, well, it's pretty scary for investors out there. You typically see a bunch of green when you look at other asset classes like Bitcoin being at the top, and then a bunch of red when you look at bond and bond performance at the bottom. What used to be a core 40% staple in every individual investor's portfolio and a major position for corporate treasuries and institutions in bonds, you're now seeing that replaced for Bitcoin. In a recent study by Charles Schwab, they found out that 45% of their investors want to invest into cryptocurrencies and just 44% want to invest in bonds or fixed income instruments. We're going through a tectonic shift in capital and financial markets. Michael Saylor calls this the digital transformation of capital.
You know, we're going through a digital transformation of everything. Apple represents a digital transformation of telephones and cameras, and Google's the transformation of books and libraries. Bitcoin represents a digital transformation of capital. 99.9% of the capital in the world is tied up in real estate and stocks and precious metals and bonds. And so we're 0.1% transformed. People, as they get educated on digital assets, are realizing that they ought to be allocating more and more of their capital to this digital asset. And so they're moving from 0.1 to 0.2%. And I think that's really driving the trend. I've said before, if Bitcoin's not going to zero, it's going to 1 million. The real question is it legitimate asset? If it's a legitimate institutional asset, everybody is underallocated to it.
Michael Saylor said this in 2023 when the price of Bitcoin was just at $42,000 a coin. Very few people had an appreciation for what MicroStrategy was doing and how they were transforming the corporate financial markets, and specifically for publicly traded companies, forever. Using MicroStrategy as an example of bonds being dead and being transformed into this lively asset like Bitcoin, MicroStrategy stock has gone from less than $1 billion when they started their Bitcoin treasury strategy in August of 2020 to nearly $50 billion in market cap today. Their 252,000 Bitcoin are worth almost 9 times as much as their entire company was when they started this strategy. And yesterday, they launched the most aggressive and largest corporate and financial engineering strategy that the world has ever seen. They're looking to transfer and transform assets from this $130 trillion bond market and $100 trillion stock market into this $1.4 trillion asset class called Bitcoin. It's an asset class growing 50% a year with higher volatility, yes, but that's what creates the opportunities and optionality for investors. Listen to this 2-minute clip from Michael Saylor where he describes perfectly how they're taking dead zombie capital in bonds and transforming it into this lively asset class called Bitcoin, growing 50% a year.
The conventional wisdom in the market is capital is toxic. Give it back to the shareholders, make it go away, dividend it out, buy the stock back, get rid of the money. And if you're going to keep the money, invest it in a 5-vol asset, which is like take your money, put it in the basement and lock the vault and then make sure it never moves. It's dead money. MicroStrategy's approach is to embrace the volatility, embrace an asset that is outperforming the S&P. And in that world, instead of being negatively polarized to capital, we are positively polarized to capital. The more capital that we gather, the more powerful we become, and the more we enrich our own shareholders. This is it's totally counterintuitive because everybody else in the world thinks you sell equity, you dilute the shareholders. That's true if you don't have a use of proceeds that grows faster and yields more than the S&P 500 index. The cost of capital is the S&P 500. If you want to be positively polarized to capital, you want two conditions. You want to be able to invest the capital in something that beats the S&P consistently. That's the first condition. It needs to have performance. The second condition is you want velocity. You'd like to invest the capital in 5 days, not 5 years. If you can invest the capital in 5 days and then you can show that it actually beat the S&P index, then you've actually got the holy grail. Now you've got a magnet which is attracting capital. And Microstrategy has pioneered this by combining capital markets activity with Bitcoin as a treasury reserve asset.
Over the past 4 years, bonds have returned negative 19%. In MicroStrategy stock, almost 2,000%. Not only that, it's become one of the most liquid and highly traded assets in all of the market in total. Over the next 3 years, MicroStrategy plans on raising $42 billion, $21 billion in equity and $21 billion in bonds to invest in, you guessed it, Bitcoin. They're transforming capital markets by borrowing at less than 1% and funneling those assets and proceeds into Bitcoin. And when their stock gets overvalued relative to the amount of Bitcoin they hold, they return Bitcoin yield back to their shareholders. This is the primary financial metric that they track. They're looking to return a 6 to 10% yield in Bitcoin to investors every year, which just means this is how much Bitcoin they own relative to the amount of outstanding diluted shares that their company is issued. So you buy shares in their company, and over time, you get wealthier in Bitcoin terms. The most interesting tidbit from their third quarter investor presentation was that their convertible bond offerings have even outperformed Bitcoin itself over the last several years. This means that investors were able to take an asset with no downside risk that they could convert at a future date or at a certain price and convert it into Bitcoin or a highly valuable MicroStrategy stock. Michael Saylor says this is sort of like taking oil or crude oil and transforming it into other sorts of products downstream through a refining process. Well, MicroStrategy is taking stored economic energy or digital capital oil and turning it into other products that are useful for investors downstream in the forms of options, bonds, their traditional stock, and other offerings that they're coming out with in the future. For all intents and purposes, Michael Saylor has done to Bitcoin in financial markets what Sam Insel did to utilities in the utility financial market. For those of you who aren't history nerds like me, that probably went over your head. But if you want to learn something, look up Sam Insel and the way that he used financial products to electrify our grids and utilities, literally transforming the energy markets as we know them today. As much as I admire Michael Saylor, Sharish, MicroStrategy, and the entire corporate treasury team over there, I'm going to take the first principle and how they look to apply their Bitcoin strategy and break it down for us today with some advice. Rule number 1, buy and hold Bitcoin indefinitely, exclusively, and securely. Well, here's something that might be novel for many of you coming to the channel for the first time. You don't need MicroStrategy, BlackRock, or some other institution for you to buy and hold Bitcoin exclusively and securely. You can buy, hold, and custody Bitcoin yourself at the same level of sophistication as Michael Saylor and MicroStrategy. This is attainable for every single person out there. That's what makes Bitcoin so revolutionary. That's why it's a $1.4 trillion asset class that was birthed out of an idea in a white paper 16 years ago. If you don't understand what I'm talking about, I highly encourage you to head over to thebitcoinway.com, where their team will teach you about self-custody, private keys, and ways that you can secure your Bitcoin indefinitely in the same way that Michael Saylor and MicroStrategy are doing. They provide one-on-one coaches to help you become an everyday Michael Saylor. Don't guess when it comes to building your generational wealth. Schedule a meeting with their team at thebitcoinway.com. I'm not a betting man, but if I were, I would predict, regardless of whether there's Trump or Kamala Harris in office, that there will be more global conflict moving forward. which disrupts supply chains and causes inflation to go higher. I would believe that more countries are going to look at reshoring and securing themselves by vertically integrating their supply chains in their individual countries. And that means higher prices in the short term. And regardless of wherever you are in the world, I'm not a betting man, but I believe that deficits will continue to rise, which means higher inflation over the long term. So in any of these scenarios, why would you lock in long-term fixed rates where you're getting poor by definition if they don't exceed the level of inflation, which we believe is going up over time? It makes sense. It's just logical to hedge your bets in an asset class like Bitcoin. And for those of you who think you're too late, CNBC even said themselves that they think Bitcoin is sort of like buying Amazon in 2014.
But Bitcoin ETFs have also seen a surge of inflows, adding over $3.1 billion in just the last 2 weeks, bringing the total market cap of those funds to nearly $73 billion since they launched in January. I've been speaking with analysts, and they say that with 1 week to go until the general election here in the U.S., investors are increasingly bullish that no matter who wins, it will be a net benefit for the industry. And already, guys, we are seeing options traders increase bets that regardless of who takes the White House, Bitcoin is poised to hit that 80K mark this year.
Okay. For what it's worth, I'm sure he wouldn't mind me saying this, but I saw Bill Miller last week. He was obviously been very bullish on Bitcoin. He's sort of, I don't know if we're going to use the word retired. You're never retired, as you know, in this game. And a lot of people have come up to him and said, look, you told us 10 years ago to buy this. Is it too late? And he said to them, Chris, I'm curious what you think, that it's like buying Amazon in 2014. Yes, it was up a lot from the IPO, but its big run was still to come.
Based on my calculations, from that time frame, Amazon was up 1,150% from 2014 to 2024 today. Pretty good returns for investors. Scary good, you might say. And if you don't trust me, maybe take your advice from Stanley Druckenmiller or Paul Tudor Jones, two of the greatest investors of all time, who over the last 2 weeks said that they were long Bitcoin, long commodities, and short bonds. Paul Tudor Jones said, all roads lead to inflation.
All roads lead to inflation.
But does all roads lead to inflation? Therefore, gold is a good investment. Is Bitcoin a good investment to you?
I'm long gold. I'm long Bitcoin. I think commodities are so ridiculously underowned. So I'm long commodities.
Today can be considered El Dia de los Bonos Muertos, or the Day of Dead Bonds. But new life is coming in the markets through companies like Microstrategy and for people like you and me, who are shifting away from these assets that are guaranteed to lose value in high inflation environments. Here's to the revolution. Viva la Bitcoin. This is Dante Cook with Bitcoin Simply. Happy stacking.